What does the Euro GBP actually means? Is the Euro going up? Is the Great British Pound going down? What the heck is called currency or base currency? In this tutorial, I'll break it down simple so you can finally read currency pairs the right way, like a trader. Let's make Forex simple. What is a currency pair? In Forex, you always trade currencies in pairs. Why? Because you are buying one currency while selling another. Simple and straightforward. So now, if you're asking yourself, how do I know it's time for me to buy, some for me to sell? First, let's start with the basics. Let's understand, what are you buying? What are you selling? So that you can have a mindset to understand the risk that is involved when it comes to trading, how you can approach Forex trading the right way. Now, we have so many assets that we can trade in the financial market. If you're someone who do not have a trading account at this moment, you can do so by going to our YouTube channel, subscribe to Bozza the Trader. We have tutorials here how to actually open a trading account and all, and make sure that you click this link to join our WhatsApp group. Now, if you have done that, you can join our WhatsApp group, open a MetaTrader 5, so that we can understand what is a currency pair and what you need to understand about base and code currency. Simple and straightforward. These are the metals, commodity. Now, let's break down the currency pairs so that you can understand in a much better way. We have the price here that we use for selling and buying. In between, we have a spread. We have a spread that we pay when we click buy or sell. But let's understand the base and code currency. How do we actually move? How do we actually trade an asset based on this one? The base asset or currency, simple means that it's always one. It does not change. It's always one. The euro, it's a code currency. It's always changing. That's an example. So now let's make an example with the euro GBP. We have the euro here. The euro will be our base currency versus the Great British Pound. The Great British Pound is our code currency. And this currency is compared to the euro. It's compared to the euro. Whenever we make profit, we make profit based on that. If we've made a sell, let's say right now we've clicked on a sell. Let's bring this, let's do like this. Section codes here. Scroll all the way down. This is Euro GBP. We tap on chart. We see buy or sell. Now we click on sell. We've made a sell there. So we are waiting for the graph to go all the way down to make profit. What it means for the asset, it means that the Great British Pound, when we make a sell here, we are predicting that the Great British Pound will gain value when it goes down. When it goes down, it gains value. Why? Because it takes, let's make this in a most practical way. Let's make an example using the Euro USD for everyone to understand. Now, it takes 1.16 or 1.17. Let's actually convert the 9 to this one. Let's say 1 to 17. Right, 2 digits after the comma. Let's make 2 digits after the comma so that you can understand better. Now, it takes a sign of a dollar. It takes 1.17 dollars to buy 1 euro. One euro. It takes what? It takes you $1.17 to buy 1 euro on your base currency here. Same applies here. Same applies here. Same applies here. Simple and straightforward. Now, when you make profit based on the code currency. You make profit based on the code currency. And how can you actually know that? If you tap on your asset, any asset that you prefer, you will go to details. Once you go to details, you will see something like this. For those who actually have some difficulties, you can also use your mobile phone, go to code, so that you can also understand what are you buying, what are you selling, and we'll get into when you buy at the same time you are selling, so that you understand much better. Now, let's tap on an asset here. Let's say we go ahead with the Euro GBP. We tap on properties and we look at what? We look at the profit currency here. It's in GBP. In GBP, Euro versus the Great British Pound. And we are looking at the properties of an asset to understand the financial asset. What are we really trading? How we make the profit? How the money that we need is calculated? So you actually have an understanding as to how to trade the financial assets, any asset that you like to trade. Now, we focused on what the profit currency here is JPY. Reason why it's USD, the US dollar versus the Japanese yen. Simple and straightforward. Here you can see. Now that is easy to understand, which means we are making profit based on what? Based on the US dollar. We are making profit based on, where's our profit currency here? Based on the JPY, not US dollar, it's JPY. The margin, money needed, is based on the US dollar. Margin is another way for you to actually understand how much money you need when it comes to trading. Now, we looked at the base currency. We have looked at the code currency. You trust you do understand how that one works. So now when you click on buy or sell, we need to have a broker. When you click on buy or sell, when you click sell, just like here, let's go back. When we click sell, we go to trade. We see we have this open position of 0.01. This simply means that the broker has taken the opposite trade of a buy. When you sell, they have to buy. A broker. If you don't understand about the broker, we have another tutorial on this channel. Make sure that you subscribe so that you learn more as to how a broker works, how to use one, how to register a trading account, and all. So the broker will take the opposite trade to go against you, but they don't work in that simple sense. They have so many ways of actually minimizing that risk, because it's riskier for them to actually take an opposite trade forward like this. Imagine if 12 million traders, they went with a sell. So it will be too much risk for them. So they have to get liquidity providers, investors, private investors, other banks. They have to get many parties involved so that they can actually minimize the risk. They'll only profit what? The spread. They'll only profit the spread. So now when you buy, the broker has to sell. When you sell, when you sell, they have to buy. Simple as like that. So now when it comes to risking in trading, we'll get into what you are buying, what you're selling. When it comes to risking, this is a two-way street. A two-way street. I want you to understand this and never actually make the mistake of risking too much money when it comes to trading. Right? You've learned that maybe let's say risk only 1% of your capital, or 10% of your capital, or your risk reward ratio should be in this way: 1:2, which means you are risking 1 to profit 2, or risk in many ways, set a stop loss and all that. But I want you to understand something. Risk, it's a two-way street. It's a two-way street, because when you have to buy, someone has to sell. So now when you talk about selling, we have to look in terms of the chart. Now let's say in this case you are using a structure, or you're using your skeleton that you draw using what? Using lines. You can draw trend lines, you can draw falling wedge, rising wedge, and flex and all that. You can draw chart pattern using a skeleton. You can also use the real structure of the market using what? Higher price and lower price. Now marking your structure. In this case, let's say we've used this chart pattern of a W, just like this. Now that's simple and easy, straightforward. But you must understand that you will not actually get it every day, and it will be not perfect like this every day. So you must understand that if you're taking risk in this way, you must know your environment. All right, maybe you do not understand the way I'm putting it, but then let me just make it clear. When it comes to trading, we have a logic in terms of strategy. We have context. We have a context. Then we have experience. So now, when you have a logic, you understand that you buy when you see an engulfing pattern. This is your pattern. You see marking your skeleton, forms your logic. And context, you understand that you are trading what? The lower for the day. If you are actually someone who have a bit of you've learned throughout our lessons that I've provided on this channel, YouTube channel, Bozza Trader. you understand context. Then we have experience. Now, experience will save you from actually making many losses. So let's get into what are you really buying, what are you really selling in Forex using what? Using the properties. Now we have what we call the contract size. Contract size will go in hand with the minimum volume and maximum volume. You can do that. You can actually get this using going to codes, tapping on an asset, tap on properties, then you'll scroll all the way down. You'll be able to see the minimum volume. So now we are buying or selling contracts in Forex using what? Using the lot size. So that can be easy. It's actually, this is actually a way for us to actually be able to trade the financial asset in such a way that we are able to calculate how much money we need, how much money we can actually make, and how the broker side, if the broker right now they are offering service, they have to actually know how much money they will be risking. So they will set a maximum volume, minimum volume, and all that. But I want you to note that we are buying or selling contracts via the lot size. So I trust you understand. Stay blessed. I love you all. If you have any questions, let me know in the comment section below so that I can actually attend to you. Stay blessed.